Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elonin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Happy Monday. Welcome to PreMarket Prep. Hope you all had a great weekend.
Fix your mic.
Shoot. I didn't. My mic is fixed. Wait. What do you mean?
They sound good now.
All right.
I think it's just I think it's the cold, Joel.
Whatever.
It
could be the cold.
Whatever. Nasally cold voice.
I apologize for my nasally voice. Good morning. Hope you all had a great weekend. Spencer, Dennis, Joel, a lot going on today. We're going to talk about the impacts of Hurricane Ida on markets. We're going to talk about the fact that today is the Robinhood lockup expiration. We have some more news from China. We have some big earnings this week. We had a Friday news dump. We don't often get the Friday news dumps. We had a Friday news dump involving Affirm and Amazon. I'm sure you all saw that by now, so we'll talk about that as well. Tim Quast at 8:35, Matt Hammond at 9. Let's bring it to Joel's charts. And then, Joel, actually, before the charts, how was your weekend?
Fantastic.
Why?
Lisa and I did something out of the ordinary, spontaneous.
Yep.
We were supposed to go to La Crosse, Wisconsin to visit our dear friends that we've known since we've been in Chicago 100 years ago.
Okay.
And we were literally in the car going to the airport, right? I got to fix my camera there. And they called us and they said, we have a family situation. You need to cancel. We were in the car going to the airport, and Lisa and I looked at each other and we're like, okay, we had the bags packed and everything. And we're like, what the hell are we going to do? And I'm like, let's go to Chicago. I lived there for 7 years. Dana was born there. Lisa did a residence there. She goes, and Lisa's like, she's all bummed. We were supposed to go to Wisconsin. I go, let's go to Chicago. And I convinced her. So we got in the car. We left at 1 o'clock. We went to Chicago. And I don't know if we have any people from Chicago in the chat, but what a great city. I mean, unbelievable. We stayed in our old neighborhood. We walked. We must have walked over 10 miles in 95-degree heat. We had all my favorite restaurants. We ate outdoors everywhere. On Saturday, after going to the zoo, we literally wore our swimsuits to the zoo, and then we hopped in Lake Michigan. And it was like 75 degrees, and it was just a blast. So, man, what a great city. I had to check out Michigan Avenue on the way back because, I heard about all the riots and destruction and everything. Michigan Avenue looks okay. And, man, the city was hopping. No pandemic there, Dennis. I'm telling you, man. Well, actually, they have mask mandates for all the restaurants. But just what a great city, man. I love Chicago, and I'm bummed we didn't get to see our friends. But, man, if you get a chance, Clark and Diversey area is where we stayed. So I had a fun weekend for an old man like me.
Sounds pretty good.
Sounds
pretty good.
I'm fighting my first cold in like a decade, so my weekend was not nearly as fun. Dennis, how was your weekend?
Weekend was good. I'm tired. Always tired after the weekend. Right. So I'm just perpetually tired. It's kids, trading, work, and it's underpaid and overworked and underpaid. Isn't that the saying that they say?
That is what they say. All right, Joel, charts. Let's rip it.
I had the charts up there, right?
No, I just brought them up.
Boom here. We're up 6 handles. Strong day, strong close on Friday. Couldn't even dip below 4,500 in the pre-market. Up 6 handles, 13.25 pre-market high, 0075 pre-market low. Absolutely no downside till we take out that pre-market low. Crude, you think it might be up a little higher with some of these platforms off production, but that's down 12 cents to 68.63. Gold back over 1,800, well over 1,800. That's over down a dime at 18.1940. Silver up a dime at 24.21. Bitcoin consolidating here at the 50% of the move. That's down 590 at 47,865. Ethereum, that's going the same direction. That's down 7150 at 3190 in a quarter. There's look at your cryptocurrencies and some of your other futures.
All right, so where should we should probably start with that, right? With
The hurricane.
With the hurricane.
Yeah.
You know, all I've seen so far is that the whole city is out of power.
Yeah.
But I haven't seen any cost estimates yet.
Yeah, I don't know. I think it's been dark, so I don't know. Like, it's hard to assess the damage. I don't think we really have an assessment on the damage yet. I mean, I think it sounds like, you know, like you were saying, Joe. I don't think it sounds like another Katrina. It sounds like you were saying that everything held up okay. I mean, it's still going to be bad, but I think some people are saying this could be as bad as Katrina. I don't think that's the case, but I mean, we haven't really got an assessment of it yet.
Good. I mean, that was
good. That's good news.
Was afraid of. So
yeah.
I was watching this stuff on what was it? It was landfall yesterday, right? Yeah.
Yeah.
I was watching this stuff like all day yesterday morning, and it looked. I saw some scary footage.
Yeah,
but that's what they do. That's what the media does.
I saw
the media. Oh, we got to see this.
Look at the CNBC screen. Yeah. Something's trashed on that CNBC screen.
Yeah, I mean, they look for the worst possible things, and they try.
Well, they always do that.
Yeah, I mean, come on. I mean, I don't know.
I just want to say, one of the coolest things I saw footage was from a drone from inside of the eye. You ever seen the inside the eye?
Too. That's pretty.
You ever seen the inside the eye of a hurricane? It's insane.
I can do some cool.
It was all inspired.
Long drones.
Well, bullish drones. Yeah,
bullish drones.
Bullish weather drones. After that, holy cow!
Yeah,
anyway,
that was cool.
So we talked about this on Friday. We talked about Generac. We talked about Home Depot and Lowe's and oil.
Yeah.
And all that as it relates to the storm. And the question is, does this play out again today? And it seems like so far it is.
So far, yeah. GNRC trading up another 1.35%. It was up like $6 or $7. We talked about this on the pre-market show on Friday. It opened right at the very low, 428.33. If you bought the opening print at 9:30 on Friday, you took zero heat, straight up 14 points. Obviously settled up only up 9 from where it had opened. It's up another 6 here this morning. Often these are events, that, once you get an assessment on the damage, they can be sell the news events. I don't think we have that full assessment. I mean, GNRC obviously trading higher here because we see so many people without power. So it's not surprising. Joel, you also bringing up ETR, which is getting blamed for some of the power outage here. It is trading down in the pre-market. These usually, these sell-offs, and ETR was down ahead of it too. So maybe some anticipation that, this might happen. Obviously, there's going to be some power loss, ETR being one of the major power sources down there. So you can see the chart on Friday, people selling it ahead of it. It is selling off a little bit more in the pre-market here because we have a lot of people, 1 million people without power. Is this a buying opportunity for ETR? Maybe. I mean, it's a utility stock. It's got a nice dividend. I don't know if I'm coming in right away and buying it, but if you want some utility stocks, it's 3.5% yield.
You know what's interesting though is that this thing never got back to its pre-COVID levels.
ETR?
Look at that. Yeah, ETR. Just look at old.
They really hit that too. They hit everything, I guess, back in March.
Yeah, but look at Detroit Eddy. I mean, come on, look at that. That's back near all-time highs. And,
it's still off a bit, but yeah.
Not what that is compared to ETR. Wait, I can't even think of utilities anymore. We never talk utilities.
Well, nobody wants to talk them. Nobody wants to make 4 or 5% a year. They want to make 4 or 5% a day.
Yeah, SO.
That's what it is.
A day, a bracket.
SO is notable. AEP is notable.
I trade them all the time. I trade them all. We talked about relationship-based trading last Saturday. I pair trade the utilities all the time. XLU, NEE is the biggest component in XLU, but Southern, I trade that one all the time. They, you can say, oh, they're boring. Why are you trading that? But when the relationship-based there, if there's an edge there, there's an edge there. I'm not going in there trying to make 10% an hour. But I mean, I'm a base hitter. If I can make, 0.5% here, 0.5% there, percent there, there's money to be made in the utility stocks, and they're predictable. So, I often talk about the relationship with TLT being, the financials negatively correlated. The XLU and the TLT are usually more positively correlated, believe it or not. So, so there's a relationship there too. And I love relationship-based trades, and there's lots of utilities to pair against each other. So they're actually very consistent trading vehicles.
And I know some of the New York ones have pretty thick books at certain levels too, right? So you can kind of pick on them.
Well, like you go into a utility stock, it's very rare you're going to wake up and it's going to be down 10% on you. So that's why when you see a 2-3% sell-off in ETR, it's a pretty significant sell-off. For a normal stock, oh, what's that? But a utility stock, it's fairly significant. I mean, you get back in this 105, 106 area, starts looking like an upper 3% yielder. People, value investors will look there. So you do have value investors underneath, create a floor on these stocks. So ETR pulling back this morning. GNRC has just been an absolute monster stock for years now. I mean, go back and look 2 years ago. In 2019, the stock was $54. It's now $442. It's up 900% in just over 2 years. That's got to be one of the best stocks, that have been out there. Like, has it continued to go higher? I mean, the trend is still your friend. I don't know. It's obviously significantly overbought, but I mean, could this be a reversal day? Sometimes you do see this happen where they move up on the hurricane, then we catch some new traders and they hit them. I mean, you're not up above. You have major resistance at 450. So I don't think I'm coming in and buying GNRC today. Up another 5 and up 17 points since we got, news of this hurricane. Really, if you're looking at 442, up 14 points anyways, because we got all that overhead resistance at 450. But, I can't argue with the stock. It's been a monster.
I'm going to give you a little different numbers here because I'm just a little, more short term. You're opened in the Friday's high, 42.28. So you want to see what happens at that level. And then after that, Dennis is talking about that all-time high at 457. There's a couple closes that you need to contend with on the way. And look at your closes from the end of July, 44.65. You had 2 in that area. The all-time closing high is 49.64. So opening into Friday's high, make sure you get some good follow-through through that. And I remember, Dennis, I don't know if you ever traded this stock, but one of my favorites when I was at Bright was on. It's lower price now. Remember AES? Did you ever trade that? It's like, I think I
trade it sometimes.
Yeah. It's that thing used to be like 60, 70, $80, and it used to have like a beta of like 2.5. And for some reason,
it used to be a wild stock.
Whenever the S&Ps took off, I could buy, as much of AES as I could, and then Goldman Sachs, and I would get a pop. And then it became lower price, and it's been on a nice rally since. But one of my old favorites there. Is there any other insurance stocks? I mean, we don't know the damage yet, right?
We don't know the damage yet. I mean, naturally, people think Allstate and they go, but the reinsurers are the ones that often really can get dinged if it's a real lot of damage. And we've seen cases like Everest RE is a reinsurer. Again, we don't have any assessment here. It doesn't look to me so far that it's going to be like a Katrina-like event. So that's good news, actually. So I don't expect, all the insurers to start rolling over. But, people naturally go to the Travelers and the Allstate. And, and those and Allstate's actually ex-dividend here today for 81 cents. So you got to adjust the close down to 136.70. So it's not really trading down here either. But, those are the things that often get sold if it is a real catastrophic event. Again, this came, very quickly as hurricane, and it hit hard, and there's definitely some significant damage, but I don't think it's, like Katrina. I hope it's not anyways.
And don't forget CMI as well. Is like a generator play, right?
Is it?
Who is?
Cummins? I didn't know.
Yeah. Yeah. It's like a isn't it like it's not a utility, but isn't it like
well, they make a lot of different things. It makes all kinds of things, so it wouldn't surprise me.
Trading down this morning, so
yeah.
Which one's that?
CMI.
It's just on an odd lot. It's trading down,
okay.
Actually. Well, actually not an odd lot. Somebody hit it at 7 o'clock on the 7 o'clock open, and then it's back up. But they make all kinds of things though, so I wouldn't be surprised.
Right. And then also in the chat, yes, Home Depot and Lowe's as well.
We always think about Home Depot.
Yeah, we always think about.
I have a small position in Lowe's.
You know what? Also, can I do a Chicago observation here?
Yeah.
The big retailers downtown. In the do you know how many Targets I saw? I mean, when you think of a Target, do you think of a big box out in the suburbs, right?
Yep.
Don't you?
Yep.
I can't tell you how many Targets I saw. Brand new, like on the bottom of these big apartment buildings. And I'm like, and then I saw Home Depot, and I'm like, this is a Home Depot. I don't know how many thousand square feet it was, but Target, man, going into the cities, and those places were packed. That was my other big observation. And also, inflation update. My favorite restaurant in Chicago, the Athenian Room,
Mm-hmm.
Kalamata chicken was maybe $11.50 when I left in 1992.
1992.
It was like $13.50. Nothing.
Oh,
I'm like, why don't you charge more for your food?
It didn't go up?
It went up from $11.50 to $13.50.
I don't know where they're getting their chicken, because I got somebody that reached out to me, and I don't know if it's true or not. They're like chicken wings. You know, the cost of buying in bulk. It said his restaurant went from $100 a bag or something. I don't know how many are in a bag, but you know, they're buying in bulk, and he says it's like over 200 now. Like its cost of chicken wings has over doubled. So really? I'm like, how do you do that? You jack the price at the restaurant, like slowly, but it's hard to just double the price of your chicken wings. So
the problem that we've talked about, is once you raise prices to the consumer, you can't really lower them, right?
Well, you can always lower them, but you know,
but
the risk of raising prices is people go elsewhere.
Who lowers their prices? No one lowers their prices. Prices only go up.
Well, that seems to be the case anyways. At least the suppliers, it seems like. So
anyway,
all right, let's move on from this. Let's go to Affirm. This is a stock that I actually almost like swore at my computer screen on Friday night, because we talked about this stock a couple of times on the show in the last few weeks. We know since the Square deal for was it Afterpay?
Yep.
We talked about it that day and saying Affirm, could end up doing a deal with somebody or could be a target, because obviously, and in the media, this wasn't just us talking about this, but I put it on my radar. I was like, I want to wait for a pullback. It was ripping that day up to like over $70. Now, what day was that? Can we see it in the chart? I think it was probably like August 3rd, like a month ago.
Yeah.
I'm going to say right in there, August 2nd or August 3rd. You see the big rip?
Yeah,
but you had multiple times where it actually, even that day, it came back down, got up to 70, and then it came back down, and then it's actually had multiple dips. And I'm mad at myself because I put it on my radar. I was like, I'm going to buy this thing when it pulls back, and it pulled back a couple of times in August. And believe it or not, it was down on Peloton on Thursday night. And I'm like, it was off like $3.50 in the after hours session. I'm like, you know what? That's ridiculous. And, this was a stock that I wanted to buy for a bet. So I bought it for a day trade. And I was like, I should put some in the swing trade account too. I didn't put it in the swing trade account. I put it in the day trading account. I made a couple of bucks on the overnight trade because the firm was significantly undersold at I think I was buying at like 66 or something. You can back it up. I don't know if you can see the pre-market or after hours from Thursday night. But I was like, I said to myself, I should buy some of this and stick it in the swing trade or the long-term account too, because eventually something might happen with them. I did not. This was Thursday night, I was saying to myself. And then Friday, I don't think we talked about Affirm, but I wish we would have. Maybe we talked about it. But, it was obviously trading 66, 67, 68. And then, so I sell out, my Affirm position or whatever and make my couple points. And then, obviously, we get the news Friday night. So give us the news.
Yeah. Affirm will now be available at Amazon checkout. To anyone.
Deal with Amazon.
And everyone. Yeah, deal with Amazon. Affirm getting Amazon in a good way, though.
In a good way.
They're getting Amazon.
And I'm just like, I cannot believe I had all these chances to buy AFRM. So I hope some of our listeners talked AFRM. I cannot, or picked it up, but I cannot believe I did not buy this. And I'm so mad at myself. It's up 42%. It's not a lot of times that I get ticked off when I miss a move. But it's like, I said to him, and I had it. And I was like, I even said to myself, I was like, should stick some in the swing trade account. But then you get sidetracked. You start doing some other stuff. And, and then obviously you forget about it. And all day Friday, it just kind of hangs out. And, the Peloton was down. So it was down in sympathy. And then boom, the news comes after hours. Let's go. Why didn't I buy that?
Yeah.
Anyway, so
did you go there? Did you
it's 42% up without me. So disappointed that I missed the boat on this one.
Oh, double negative for me here. Number one, shout out to Sean Udall.
Yeah, okay. Sean gave it to us too.
A long time ago when the thing was in the 60s.
I think he was in it. I tweeted with him. I think he participated in this move for sure.
Number two, why I for sure I can remember the that I should be in it because he remembered it. Now, why do we remember Affirmed? Why do we know that name, Affirmed?
Why
Come on.
Why do we know it?
Yeah, Affirmed. Not Affirm, but Affirmed. ED. Come on, guys.
I'm not.
All right, you lost.
What is going on with this?
I'm not picking up.
Affirmed.
Yeah.
Affirmed.
Why do we know Affirmed?
Like what does it mean?
The name.
You agree with something? I'm not.
Oh, come on.
You define it.
Picking up whatever it is you're pointing out. I am
Affirmation.
I don't know.
I bet you. I'm not saying.
Oh, the horse.
The horse.
Okay.
A horse is a horse, of course.
All right.
Come on.
Ahead of us here today.
We totally forgot about the horse.
Triple crown winner, and do you know who he beat in every race? Every single race. The horse got 3 seconds.
No.
Aladar.
And that's who you had?
No. Actually, when I was hopping out of Lake Michigan, got a call from Todd Gordon at the Traverse.
Oh,
and the Traverse was this weekend, and
right.
I said, "How can you beat Essential Quality?" And I said, maybe get a little throw in some exactas with Midnight Bourbon, which I did, and then Miles D. I wanted Miles D really to come in second. But little horse racing. Traverse.
We should have got that, Spencer. Joel threw us a
should have.
softball
Yeah,
up the middle.
1978.
We were both thinking about the word.
Yeah, I know. I was
about a horse.
Who won the Kentucky or who won the Triple Crown in '77?
Secretariat.
No.
When does Secretariat win?
I believe it was like 71 or 72.
Oh, potato, please. 71, 77.
It began with an S, though.
What's the difference? Seabiscuit, no.
No. Look at Spencer. He's laughing at his own jokes. It's so cute. Seattle Slew.
Oh, all right. Whatever.
Anyways, AFRM, Joel, thoughts now, technically. I'm not touching it up 28 points.
I don't know.
It's going without me now because I don't like jumping on moving trains, and this is a rocket ship you're trying to catch on to. So I don't know when it runs out of gas. It went over $100 after hours on Friday.
I'd use that as a target.
Sure.
If you want to go
I think it's a ring. If I was long, I'll just say if I was long AFRM, like I should have been, I would be ka-chinging right now for sure.
Yeah,
that's what I would be doing. I'd probably be wrong. Maybe it's going to continue. We know stocks that are hot can get hotter, and a lot of them do. So I'm going to give it back to those. So, what's this mean for Mastercard and Visa?
Well, hold on. Let me finish. Pre-market high 103, and then our level of control over the next couple days is 97.25. That's, believe it or not, halfway back of this move. The all-time high is much higher. So if it can hold 97 for a couple days, consolidate, and make a move. I mean, this was nearly $150 stock, but I don't know. Just keep an eye. Level of control 97. Juicy target 103 on the downside. Absolutely. You know what? I think you should buy this stock on Friday, like Dennis did. I have no idea where support is.
Yeah, I wish I would have. Go on without me.
All right, Mastercard, Visa. What's going on?
Yeah, and I'm long Mastercard. I've been long Mastercard since birth, basically. It's like 14 years I've been a Mastercard now. It's been a great one. My buddy Chris brought it to me way back in the day and still long it. I don't know. It's down. I think Mastercard and Visa, like multiple people were asking, Mastercard and Visa going to get hit on this. They're getting hit a little bit. They're both trading down slightly. Obviously, with Amazon, coming in and the market there, does it ding them? I think a bit. I don't think you're going to see huge down moves in these. I don't think people are thinking that much about it. What are your thoughts, though, just technically speaking? I mean, Mastercard and Visa, the charts haven't looked good for a while here. They've been leaking. I would say Visa, it's kind of concerning, actually. The technicals, 228.90 is critical support. Needs to hold that. There is definitely this recent uptrend has been broken. The question is the long-term trend, from the lows in 2020 stay intact? It's challenging that right now. So these charts don't look great to me. So I am long Mastercard. I don't intend on selling it because I don't want to realize a ridiculous gain. My average cost base is $16 on it, so I'm not selling it. But if I was long it just for like a swing trade or whatever, or just short term, I probably would sell it.
Competition, right? Competition's coming in, and I hate to go back to Chicago observation again, but Athenian Room, does not take credit cards, and I think 1 or 2 other restaurants we went to was cash only. So, man, people are sick and tired of paying the fees. I mean, they pay huge fees. So, for Visa, you're right. You're leaning on the low of the move here at 228.90. So that's it. The next monthly low is down. Ooh, at 226. I mean, it just doesn't look great. They need a catalyst. Major resistance 236. Mastercard, that chart almost the same. That made a new low of the move yesterday. And you know what, Dennis? I know I probably told you to sell this at 100, at 200, at 300,
300,
at 320, at 350.
I did sell some on the way out.
But you know
I have
what?
sold some. I've taken. I have. This thing has went so many times. I sold it multiple times. But
Look at this monthly though, Dennis. The bottom chart here. I mean, I give it to 346, giving it some wiggle room. But you got 1, 2, 3, 4, 5, 6 months of holding that level consolidation. I mean, that's what it did here. But I tell you, this is on the verge. I'm not going to go too close with the low here, but I give it a little bit of more room. But I don't like the way that monthly chart is shaping up there. I mean, support is support until it's taken out. But a lot of competition coming for Visa and MasterCard.
I will also mention Square is trading up today. So
they don't care. PayPal doesn't care either. PayPal's trading the green too.
Yeah.
At least for now, they don't care.
I still don't really get how Affirm makes money because so obviously they charge interest.
Yeah.
Stud fees.
But,
Well, I think that's the
but no, but isn't it like there's no interest payment if you pay it on time, right? It's not there's no hidden fees. It's like I thought if you paid upfront, like everything on time, you don't.
Isn't that the way Mastercard and Visa work too? I guess they get the little cut from the merchants. So and I'm sure Affirm gets a cut from the merchant.
Well, there's a cut from the merchants, yeah. But if most, maybe people don't pay on time, is that really?
I think so. I don't think
All
a lot
right.
of people pay on time.
I thought that was the point. All right, fine, whatever.
Yeah.
All right.
That's what it is.
They're saying people don't pay on time. I thought the whole point was that they make it so it's like, why wouldn't you pay on time? But I guess people don't pay on time. All right, fine, whatever. Okay, so Affirm and Amazon partnering up. That was moving on Friday. Let's talk about China here for a second. There was a new regulation out Monday, so today, but over in China, regarding video games. How much time can be spent playing video games? So prior to today, the rule was if you are under 18 years old, you can only play video games for up to an hour and a half a day or 3 hours a day on holidays. That was the rule. Now, the new rule is if you're under the age of 18, you can play video games up to 1 hour on Fridays, on weekends, on holidays.
The control.
That is it. That is it. An hour a day on Fridays, weekends, holidays.
How do they track this?
There's going to be a
how is
relevant.
this tracked?
Oh, you could shut down.
I guess they shut it down.
How is it tracked? It's because it's
how is it tracked? That is, it's China.
No, it's not a question of tracking. It's a question of the services being offered. Wow. I get it, right.
It's so hard to be an investor in China when they keep, just you think, okay, this can't be good for Tencent. I don't know what it's doing, but so
NetEase, NTES,
yeah,
Billy, BILI. Those are kind of your two.
They're getting hit hard.
Yep.
Billy's down 6%. NTS, it's every single, at least once a week, we come in, and China
once a week,
yeah, at least once a week, has done something to one of their sectors. Now it's the video gaming sector. So it's so tough to be an investor when you got the country limiting profits that companies can make in different ways, and now they're limiting how much use they can.
It's not
so
about.
I don't know how. I own a little bit of Alibaba. I kind of want to own more. I talked about it on Friday. I kind of want to rebuy the shares that I sold because it is dirt cheap on a valuation level. But I don't know if you keep limiting profits and profits go down because the government won't allow it. I don't know what to say. I mean, there's a reason the FXI has significantly underperformed everything for the past, at least for the past month, but I mean for the past decade. And it's probably because it's not free capitalism.
I think back to maybe this is an apt metaphor. I think back to the line from the Joker in The Dark Knight when he's burning the pile of money, and he says it's not about the money, It's about sending a message, and that's what this is. It's not about the money.
Sending the message that they're in control.
Yeah, it's not about the money.
It's about control.
Yeah.
And they're in control. And I don't know. They're in control of the companies. They're in control of the people. They're in control. So I don't even know what to say. I'm like, I look at it, and you think, 10 years of underperformance of the FXI, maybe you should be, backing up the truck, and there's going to be eventually catch-up trade. But then they do stuff like this, and I think, no, why? Why do I want to go there? This money's been made easier elsewhere. There's a reason they've underperformed for 10 years, and this is one of the main ones.
Do you have any restrictions on Spencer and Natalie for
iPad time and stuff?
Yeah.
Like we control it completely, and it's only they're 4 and 6 though. I mean, am I going to be able to have restrictions 10 years from now? Probably not.
Remember Game Boys, Spencer? Did you ever?
I never liked the Game Boy.
Absolutely, Joel.
Do you know that this was the Lisa restriction? They were young a long time ago. They could only have and use Game Boys when we went on vacations.
Okay,
that's a good
like
rule.
in the car or on the airplane or something like that.
We all control our kids to a certain extent.
Yeah.
We try to, anyways.
Yeah. Now that I don't know how well that would.
I used to catch Spencer when he was this is probably when he was 3, but he'd wake up in the middle of the night and sneak and go get his iPad.
What?
And I'm and I had to actually hide the iPad. He got disciplined for that. Yeah, I caught him. I went up to the bathroom. I was like, why is his light on his bed? I was it's 3 a.m. He's watching his iPad. Spencer, you cannot do this.
A 3-year-old?
He was 3 or 4. Maybe I guess he was probably 4.
Oh my
Yeah, because they have iPads, that they can play.
Yeah.
It's limited what they have on there. But there's some little, video games, and they have a bunch of learning apps and stuff. But he was sitting there doing that. And I was like, okay, this can't happen. And then we literally hid the iPad for a while. It was no iPad at all for, I think I was over a month when I found that. So, but now he's 6 now. He knows better. He doesn't do stuff like that. So it's a little bit more control. You're 4, you push the boundaries a little bit more. 6, you start to get a bit more of a feel for boundaries.
You didn't say you caught him looking at charts at 3 a.m.
I wouldn't have disciplined that, Mitch. I would have allowed that.
He was monitoring your overnight portfolio.
At 3 in the morning, he was looking at stock charts.
Yeah, Dad, you better get up at 4. I think you're going to be underwater in this one.
That's what he was. That's what he was doing.
I would have allowed that.
Oh, you would have allowed that?
Yeah, yeah, for sure. You want to look at stock charts at 3 o'clock in the morning, and give me some good stock ideas? I'm like, what's your research? I was sleeping all night. Spencer did all the research. That's the dream, right?
Yeah.
The boy starts doing your job, and you don't have to work as hard. Isn't that the dream?
Start him young, Dennis. Start him young. It's 8:34. We're gonna have Tim Quast on in a minute. As a reminder, everyone, please do me a solid and hit that like button on YouTube. It's the thumbs up. It's the one that looks just like my thumb, but it's just not. It's on the screen. Hit that button. Thank you very much, and we will.
Like this.
Right, just like that. One of those. I don't know. One way. Anyway, okay. Before Tim joins, a reminder that today is August 30th, which is the lockup expiration on the Robinhood IPO. It wasn't the firmest lockup in the world. You if you got the IPO, you were still able to sell. You just got penalized by not being able to buy IPOs on Robinhood for 6 months. But how many people don't care about that? Probably a lot. So I'm sure some people bought the IPO and sold already.
So before we bring Tim, tell me what the difference between is a soft lockup and a hard.
Well, I just said it.
Yeah, but no, explain it better.
If you got Robinhood shares at the IPO,
yeah,
you're not allowed to sell for 30 days, whatever,
okay.
Right, 3 months.
Yeah.
Robinhood would have let you sell. If you tried to sell your shares, you would have gotten a pop-up and says this is called whatever the term that IPO flipping or whatever. If you sell, we are going to restrict your IPO access going forward for 6 months. You will not be able to buy an IPO on Robinhood for 6 months if you sell this right now. Do you still want to?
Really?
Do you still want to proceed?
That's interesting. I didn't know that. I don't have a Robinhood account.
Yes, I want to proceed anyway because I don't. How often do most people buy IPOs? Not often, right?
Yeah.
So yes, I want to proceed anyway. Or no, I don't. So anyway, everyone else now is allowed to sell starting today. Is my point. So keep that on your
What does that mean for the stock? Sometimes these things go down on it. Sometimes they're overcrowded shorts on going into it, and then they don't go down on it. I will just say last 2 days, the two lows are 46.14 and 46.40. Take out 46, and then you start thinking about the 42 low, 42.44 back from August 20.
Analysts got this one going last week. It was the analyst.
Who was it?
It was.
I do remember a rating.
I'll tell you. Yeah. Oh, go back to a week ago. It was Rosenblatt on Tuesday, and Monday was everyone. Monday was Citi, everybody, everyone on the street, basically.
Quiet period is over, man.
KeyBank, Goldman, JP Piper, Barclays, Deutsche, JP, Mizuho, Citi, everybody. Okay, let's bring on Tim Quast for our regular Monday. Tim Quast, CEO of Market Structure Eggs. Tim, good morning. How was your weekend?
It was packed, Spencer. We had family in, and we do the stuff that oldsters like me do, which is tailgate at a Kebmo concert.
Well, you
probably don't even know who Kebmo is.
I know what tailgating is.
I was going to ask.
Right. So, well, that's what counts, right? He's, I think, a 14-time Grammy-nominated, call him blues jazz kind of musician, 2-time Grammy winner. And he is fabulous. So all we geriatrics gather in the parking lot and, of course, eat stuff like crostini and drink rosé. That's what we do. There's no Bud Light.
I've watched it before. I've seen him before, like on YouTube, because I'm into that kind of stuff. So
no beer bongs.
No beer bongs. It's no longer age appropriate. We would draw strange looks from the youths if we did that. So exactly, the youths of America.
Yeah. All right. Tim, let's start with this. Today is August 30th, which means it's the end of the month. Well, tomorrow is the end of the month. But what could that mean here for market structure? Yeah, in the next couple of days.
Well, it calls to mind the contrast between things that I think should matter to traders that are market structure, behavior of money, behind price and volume in context of rules versus what everybody else is talking about. And I heard you talking about Robinhood, by the way, and Rosenblatt. Those guys are market structure experts, by the way. They are big time. They understand market structure. And so I'm listening to a well-known business news channel before this program, and they're all talking about the effect of the Delta variant, COVID-19 Delta variant, and Jay Powell's comments coming out of the Jackson Hole confab, and I'm going to do the exact opposite, which of course, as it probably does for you, Spencer, it calls to mind a Thomas Jefferson quote, who said, and you probably already had thought of this, that he said, that he considered economy, frugality, to be among the first and foremost Republican principles, not the Republican Party, but the representative government, and public debt at one of its greatest dangers. And of course, things are the exact opposite of that. So I'm going to be the exact opposite of what's the headlines and get to your point. So your point is, why does month end matter? It has nothing to do with the Delta variant, got nothing to do with Jay Powell and Jackson Hole. It has to do with the way that the market works. And this is very important for you traders. It would be the same if you were in the weather predicting business of watching a storm form in the Gulf of Mexico and head toward New Orleans. It would be good to know what's coming. And I'm not suggesting there's any kind of storm, but it's just important to understand that at the ends of months, hedge funds want to true up to take their gains. If we've had a good August, they want to lock those in so they can tell their clients that they've done well. If you're a big institutional index investor, or if you manage exchange traded funds, you want to make sure that your positions track the benchmark. Otherwise, folks like Morningstar will hammer you, and it's bad for marketing. And so what happens, here's the thing that's important to understand. There is a cause and effect relationship at month end. And the reason that it occurs at month end, in addition to that, is there are these options and futures contracts that expire tomorrow. It happens at the last trading day of every month.
He's right.
So you're a big institution. You can hand this baton of having to deal with that off to, say, Goldman Sachs. Goldman Sachs will serve as your prime broker. One of the things that a prime broker will do is take the selling that you want to do and carry it over the goal line. So it doesn't hit till a couple of days later. Goldman Sachs will take the other side, offset its risk with options and futures that expire monthly. They'll look around to say, well, what can I do with this liquidity? Is there another hedge that I can support with it? Are there options and futures that I can fund with this liquidity? And whatever's left over then gets dumped. And that's what then people, then all the commentators, all the talking heads say, oh, it's the Delta variant or this thing or that thing. No, it's the basic mechanics of the marketplace. And it repeats over and over and over. And it's very important to know. So what we like to know, looking at this, is what is the supply-demand equation in the market? What does it look like in healthcare? What's it look like in communication services? I want to know all of that stuff going into month end. Yep. So we have an idea of which side to be on. Should we fear it or see it as opportunity? That to me is what counts. And so if you're an edge user, you already know this. We talk about it all the time, and you can go look at that. By the way, if you don't use Market Structure Edge, give it a try. You could do it for free for 2 weeks. Just a good way to have some exposure to market structure. It may not be right for you, but it's an easy thing to do. And I bloviate every day, every day of the trading week about these things so that you have some idea of what's coming. So that's the tee up, Spencer. That's what we're talking about at this transition.
So how do you play it then?
Well, so here, I'm going to share my screen because I'll just show you. This to me is what the data look like. So bear with me here for just one moment. Let me get my own face out of the way. I've got a face for radio. Here's the Benzinga Pre-Market Prep August 30 portfolio, by the way. I want to look at a couple of things if we have time. But here's what I do. I'm going to look at broad market sentiment on a 10-point scale. Above 5 tends to be more demand than supply, and the market has averaged over the last, you go back to 2012. From January 2012 to present, that's how long we've been tracking these data in the same way. We had some data before that, but to say apples to apples, we have tracked it that long, and the market has averaged 5.4 on a 10-point scale. That is a growth at a reasonable price market. And right now it's at 4.6. So it's below that nexus of supply and demand. And that doesn't necessarily mean bad things for the market, but it does suggest if there's some bumps, if we run into a door frame of August, exiting August, that will be the reason. It's predictive. So this peak here drove a very nice gain. Now we have this swale that has not manifested. I'm not saying it will, but I think that there's some risk of that. But then looking across the dashboard, so we call the dashboard, this is like the bridge of your ship. It's all the dials and gauges that tell you how you're navigating. And we look for the demand side. The demand side's here. So if I look at airlines and cruise ships, the demand side and the supply side, demand is rising and supply is falling. I could look across, I'm going to go down here to the C's because here's a great way to see 3 sectors all at once. Communication services. This is where Google and Facebook and so on are. They're not in tech. You think they are. So look at that. Demand side rising, supply side falling. That's pretty good. Consumer discretionary, demand side rising, supply side back at trend. Consumer staples, demand side rising, supply side falling. All of those look good. So as we get into September, I would say we could have a pretty good run, but we're just getting to it. And there's a cause and effect. They're not correlated, they're leading indicators. So I would say opportunity is going to arise in September in a number of these areas. But if we bump through this transition, the reason why is because we're below 5. Over the whole market, we're below 5, and we're just working our way back, and there will be a causal relationship between the two. I won't guarantee it, but it's not going to surprise me.
All right, Tim, I got to ask you about support.com here, if you can pull that up. Can you tell us what is going on from a market structure standpoint in SPRT right now?
I wish I could. It's one of those weird situations where you have a SPAC deal that is unfolding here for support.com. And so because we're heavily tied to GICS data, general industry classification system that we buy from the S&P Global, we don't have that data right now. And so we will, I think by tomorrow, we will have that data. But to put this, and you guys are probably, all of you traders, you're probably ahead of me. You know, that thing's gone up. If you take pre-market today and I think Friday, it's up like 75%. And you know, what's going on? Is it a Reddit mob short squeeze sort of situation? I'll remind folks, if you've listened to market structure, a short squeeze is a small part of what actually occurs. Meme stocks happen because there is more demand than supply.
Yeah.
That's why. It goes back to this whole market maker exemption. And I've repeated, you know, the people who listen all the time, you already know this, so bear with me. It's not my fading mental faculties that leads me to repeat myself. It's for those who maybe haven't heard. It's the market makers who are the ones, all dollars in the US stock market have to pass through a broker dealer. And it could be the same broker dealer on both sides, but there will always be broker dealers participating in a trade, and they're exempt from having to locate shares to borrow. So if there are suddenly 10,000 limit orders to buy support.com and nobody's selling it, how could the stock go up? Don't you have to have sellers for every buyer? No, you don't. You don't. You have to have a market maker who, by law, has to take the other side of the trade. I use it all the time to my own advantage. I know if I put in a trade at the market for less than 100 shares, I like to be very close to the dollars per trade average. So that will determine how I enter the trade. I know it has to be executed. It's the law. It's going to be my own broker's dark pool or alternative trading system that will take it, or they're going to route it out to somebody who has to take the other side of the trade. So if there are 10,000 orders to buy SPRT and nobody's selling it, brokers are going to manufacture stock to fill all those buy orders, and the stock's going to go up 50%. The good news is you can see it. You can see that coming. I'll use maybe another example. Let's look at
another example.
Because we can't, you know, I unfortunately can't use support.com to illustrate this, but let's look at Zoom. You know, Zoom often has these characteristics, and Zoom is reporting results after the market today. Mm-hmm. So it's a good reason to look at this stock. So I'm going to back up 3 months, and I'll give you just a case in point. Here was an example of a whole bunch of stock being created right here. It's not necessarily the time I would buy it, but what this is showing us is the trend line. The dotted line is the trend line for short volume, not short interest, but the amount of stock coming from, the amount of trading volume coming from borrowed or created stock. And this huge surge way above trend is something you can see. So if price is not surging on that, that's probably money leaving instead of arriving. So when we can see price rising, demand rising, and a huge creation of stock, that's how meme stocks behave. I could show you GameStop and AMC and various others to show how those things play out. So this stuff was market makers knowing that ahead of options expirations, there wasn't a huge amount of demand for Zoom. So they short it, price goes down, they cover right in here. See these two things? They're the reverse. This is very high short volume. Now all the market makers have covered. So this is where Zoom is, by the way, right before it reports results. Demand is rising and short volume's right at trend. But demand this is a weak chart. Is a demand level at about 2.6, not even, it's halfway to 5, with short volume already at trend and over 50% of trading volume. Is that going to create a big surge in Zoom? It's unlikely. It's unlikely that that's going to occur. You would want this kind of chart. This is where I buy Zoom. If I see short volume plunging and demand rising, that's the place to buy. And that gave us great gains till it reverts to 5, then leave. Maybe even sooner. I leave when short volume pops above trend. But you can see all of that. You don't have to be caught out by meme stock situations. You can see it in the data.
All right, Tim Quast is the founder and CEO of Market Structure Edge. The link is up on the screen. The platform is up on the screen as well. Tim, we will talk to you again next. Oh, no, we won't. Next Monday, there's no show. There's a holiday. But we'll talk to you again. I think you're on the calendar for Tuesday. I think
I can sleep in for a change.
Oh,
Yeah.
wow.
Look
I get to sleep in
forward to
too?
that.
Do I get to sleep in too?
I think so.
That's
so.
amazing.
we will see you on next Tuesday, Tim.
I don't get to
Sounds
sleep in
good.
because I have kids.
Have
so
a good
tight.
week, guys.
All
All
right.
right. We'll see
See
you.
you, Tim.
8:51. I want to talk about.
Go back to support.
Yeah.
Talk
This
about
thing
it,
is
but
crazy.
We can.
So I'm trying to understand it exactly. Apparently there's. I don't know. I
don't know anything about the fundamentals of this company. And I will just say that when you have a move like that, that's what's called upside capitulation. You had a stock that gapped up on Friday on ridiculous volume and then ran and blew everybody out. I mean, we had probably even multiple halts in that I wasn't paying attention to. I'm sure we did. And then you had the complete sell-off in the afternoon, and the stock fell more than 50% from the highs. I have a lot of people caught from Friday. So you get a snapback rally here today. In my opinion, this rally is to be sold. So this is just technicals, but when you get the breakdown, the stock closes at the low, and you come in and the stock's up 10 more points, there's going to be people who bought this on Friday saying, "Thank you, I got my money back," or "Just please come to 40 and I'll get my money back. Please come to 45 and I'll get my money back." So it was huge volume. There is a lot of people who are caught in this, stock. I know a lot of people made a lot of money with it, and congratulations to those. But people who bought this on Friday, majority of those people, obviously every single person who bought this on Friday, unless they were buying the pre-market, was down money by the end of the day because it closed right on the low. So you see a weak close like that, you get the snapback the next day. You typically want to be a seller of that snapback. So I don't think this is going back to 50 or 60. Sorry to the people who bought it up there. I do think this will actually revisit the 26.33 low. Maybe not today, but I think it will revisit it sooner than later.
And then
That's just my opinion. My opinion.
The other big one is BBIG. This is we had them on the Power Hour last week or maybe the week before. This is a company that has been they were late on a 10Q filing. There's a M&A deal that we've been waiting on for a while. Apparently, there is some confusion out there as to what exactly the size of the float of this company is. But they told us it's 40 million shares. Same thing. I don't know. It's
a windfall for who was long it on Friday. I mean, you just have the stock go from 3 to 8. Can it go to 10? Can it go to 12? Go wherever it wants. They can continue to go. I typically get lucky like this. I ring the register. I mean, if you're in, and there's been a lot of people who've been stuck in this thing too. I've seen this one, my social media stream for a while. So I think it's a ring the register opportunity. I do think you're seeing upside capitulation similar to what SPRT. I do believe BBIG will top out today, but I cannot give you the price. I mean, it might go to 10. A lot of times you do see these things get up 8, 9, and then maybe it already did it. What did it do in the pre-market? It already did 10. What's BBIG? Let me see the pre-market chart because that'll tell us more of a story.
It's so funny.
I have no position in any of this stuff.
I know.
I'm just giving you the technicals. It's all you got.
BBIG.
Yeah, you got big up there. Try BBIG out.
There you go. It already got over 10.
So you're already starting to come in. And you know what? It could revisit it. Maybe it does. But when you get these huge volumes, it's traded 35 million shares in the pre-market. It's going to be like the most traded stock today. So, I mean, the volume's absolutely incredible. It's up. I think you're going to eventually have some bag holders in this one too. I'd be selling the pop. But that's just me.
I'm looking at the charts and I'm like, oh, well, yeah, they get over 10 and now it pulled back. I just have to pick some intermediate levels. If you really got a pop and you weren't holding out for 10, I would look for 940. That was your previous year high, but they'll give it little bumps, but you can see sellers have come down off 10, then they came down to 9. Who knows if they'll come down to 8. And then the other one, SPRT, Dennis, I mean, if you were up at 4 a.m., you would have had a field day in this way. SPRTsupport.com.
Yeah, no, it got up over 40. I see
it did. Oh, yeah, there's a leak. That's what I was looking
It's
for.
leak. I think you're going to find
41.
too many sellers here now.
Hard stocks to trade.
And you know what happened?
Hard stocks to trade.
Really hard. But you know what happens? It's like this wave of, this, FOMO retail buying, social media driven stocks that go from one stock to the next, and it's driven up and it's up and then it just fades away and people aren't talking about that one anymore. And they move on to the next one and they move on to the next one. If you get ahead of these waves, you can definitely make some money. But, there's a lot of people who fall behind these waves and then they get stuck. And I've been there too. I've been stuck in some of these, different social media stocks and then they come in. Let's move to the two major social media stocks, AMC and GME, because these two actually are interesting. I've talked, and saying long term, I don't like them because of the fundamentals, but short term, you can trade anything. I will say you have a setup at AMC and GME both. I like the little double bottom. I'm going to call AMC a double bottom from the last 2 days, even though it's 60 cents apart, but it's AMC and it's a little wild. Whenever you get a big up move, and then you get some consolidation, a lot of times, sometimes you'll see continuation of that up move. And with the amount of money being driven in social media stocks, it would not surprise me if AMC and GME started to catch a bid again. If I was buying AMC, and I'm not, but if I was, I would stop myself out on Friday's low at 39.39. So you're risking about $2 here. GME, a cleaner double bottom, right above a nice strike of 200. 199 the low from Thursday, $200.02 the low from Friday. Stock is trading up here this morning. Again, if I was buying these, I would stop myself out there. A 2% risk or 3% risk on GME is not much because the stock can move. And sometimes you see that boom. It's like a flag, right? So you see the boom, the big up move, consolidation, and then sometimes you get a continuation of the original move. It works in reverse as well. So I actually like the technical setup on this. I'll probably not trade it just because it's GME though, and I know the stock is too wild for me.
Looking at both, I see the setup that you're talking about. The AMC, I see the setup too. You've had a move from 28 or 29, about a 20-point move. So you got good, no more than that. You've had a 22-point move, 11. So don't know if you're going to get that 50% retracement in there that you're looking for. It looks like it's kind of holding above that. Maybe a couple more days of consolidation because they, just like lull people in a little bit more on the short side.
See, if it consolidated for a couple more days, I wouldn't like it then.
Oh, okay.
I'm of the opposite opinion. I don't want to see it consolidate for 3, 4, 5 days because then it's like, okay, they've given you too many chances to buy it. I like the 2 days, like boom, you see 2 days consolidation, maybe 3, and then the go. And so I would say if GME and AMC don't go today, then I wouldn't want them. So I think that they could. I think they could move. They're already moving a little bit in the pre-market. And obviously we're seeing, I'm relationship based, right? So I see, the movement happening in the, BBIG, which was this big social media stock. And you see the big move that happened in SPRT, which was one of those as well. And you think, okay, well, maybe they're going to move back into these ones too. That money will find its home there too. So I would want, if I'm long AMC and GME, I'd want to see a move sooner than later. Again, not long either stock.
The only reason I'm saying that is because they kind of catch people off guard a lot, and they kind of had like this an AMC here. You had the low, the run up, the pullback, the run up, the pullback. It just seems like they like to lull people in a little bit. But you got to set up. I like it. Pull back, and there's your areas.
That's all you need is a setup.
I'm not fading with you. I'm not fading you on that.
And again, I don't have any position in these. I'm just giving you the technicals. So again, long term, I don't want to be stuck with these. That's why I would have tight stops. If I was to put these on for a trade, I believe AMC and GME, the fundamentals don't justify the price, and I'm still long term a fundamental guy. But as a trader, I trade anything, and I can see a setup here in GME and AMC. No position in either, at least not yet.
Shout out to Daryl McGuire. This is going back to our chat earlier regarding Affirm and Afterpay and all that. But KPLT is a sympathy play that we did not mention. So KPLT is up today.
KPLT.
I've never traded that stock or heard of it.
Catapult. It's the same thing. It's basically the same thing.
What is that? Sympathy to what?
Affirm.
Oh, okay. No,
yeah.
I've never even heard of that one.
KPLT. So shout out to that because we didn't mention it. I didn't mention it.
Okay.
How do we know it was it same because the charts couldn't be.
Yeah, they couldn't be. The stock is we're assuming that Spencer knows his research there. So.
I mean, yeah, it's a fintech play.
535.
Yeah.
Pre-market high. You leaked the buck. Let's see. Get into a gap of 588 would be a real juicy target on that one. So, all right, 9 a.m. I'm going to hop off and go to PreMarket Prep Plus. Been getting some great participation there on ticker time. I know we didn't get to cover them all here. So I'm going to hop off, let you guys take it the rest of the way. Spencer, I'll catch up with you later on.
Yep. And if anyone has any questions or anything about the recording from the Saturday event, just email premarket@benzinga.com. That email goes to myself, Joel, and Dennis.
If you subscribe to it, I know some of that there was it only lasted a week on the Zoom call, but we have another recording of that. So if you did subscribe to it, we'll obviously have to check to make sure you're registered. We're registered for the event. Then you can get sent a recording.
So again, premarket@benzinga.com for any questions about that. Dennis, have a good day. Get some.
I hope you feel better, Spencer. And just for clarification, some people are saying, "Oh, Spencer's in the office; he's sick," but he got a COVID test.
I got my first ever COVID test on Friday, and it was negative.
So you're good.
So
you don't look like you have COVID.
I don't have a fever.
Yeah.
I'm not achy. I don't have anything in my chest. It's all up here.
Cold.
It's all in my head. My nose, really. So anyway, but I appreciate the concern. Thanks a lot, Dennis. Talk to you later. All right. It's Mondays, guys, and Mondays at 9 a.m. we bring on Matt Hammond from IPO Warriors to recap what happened last week and look ahead to this week in IPO land. So let's do that. Matt, good morning. Thanks for joining us. How was your weekend?
Not too bad. Thanks, Spencer. How was your weekend? I understand you're fighting off a cold, hopefully. Just a cold?
Just a cold, man. All right. That's all. But it's more annoying more than anything else. It's just annoying. It just won't go away. Anyway, I've been downing Mucinex like all week. But anyway, let's bring up some slides here, and we'll start with. I like this note. Keep an eye out for low float sneakers. I love that note.
Right.
Talk about it.
Yeah, so low float was it's been a theme for the last few months. We haven't had a lot of blockbuster IPOs, and it's not just in the IPO world, but certainly IPOs have always been a target. They have their own catalyst built in because they're going to get some promotion simply because they're on a calendar that people are watching. And we've seen low floats be sort of a target for social media, trending stocks. People are jumping in on them. It's pretty easy to manipulate the price. So people understand, hey, if we get an army of people together and we all go after one stock, why not make it a low float stock? That makes everybody's job more, that much easier. Right. So with a thin IPO calendar to begin with, there are people like me who target IPOs as they've got momentum built in. They get their own promotion usually. So, we look for those, and people have been making profits, taking profits off of these low float stocks, and especially low float IPOs. And a lot of times these are not well promoted at all. In some ways, it seems like that's almost intentional. They're not often on the calendar, even on a Monday. They'll show up on like Tuesday or even Wednesday. It was last Thursday that I saw this one from last week. I sent out, to the newsletter group, go to IPOwarriors.com, sign up for the newsletter. You will get these alerts. I gave out DATs before it debuted. The day before it debuted, it then ran from about, I think it was around 450. I think it's up about 850, 2 weeks later. And, it's just easy, instant profits. And both of the IPOs we saw this week, I sent out a notice on SQL, which we'll talk about right now. It went up 70% since Friday to pre-trade this morning. RNXT, which I did not play because it was biotech and had a bad day one. It then ran to 140% win in the early pre-market on day 2. So these low float sneakers can be a lot of fun. I see them especially when they don't debut at a huge premium or they debut below the IPO price and then offer like a dip. That's a great time to buy in. The downside is that much more reduced, and the upside, once people start realizing, hey, wait, this stock IPO'd, they read about it overnight after the IPO. They start, the buzz kind of starts right on day one and carries into day 2, and people start loading in. And, even SQL today, I think it's trading pre-market right now. It's 475. This could run, on a day like today where low float is, I think everything everybody's targeting right now is, either low float or short interest. And these trades, they kind of pick up momentum. Nobody's really selling. They all have a target of trying to pick off $6 or $7. So they just keep promoting it and piling in, and that's what drives profits. So we see a common trend in these is that we are getting a bit of a dip off of the debut. So this is looking at Renovo RX. So this had a super low float, just 1.8 million shares. And that alone in this market is enough to get interest. They do have a phase 3 cancer treatment in the FDA trials process. So that's another catalyst. I mean, that's something that people are like, oh, well, if I have to, I'll bag hold this until they get approval. I think it's not going to slated for like final approval until about 2024. So I don't want to be stuck in this, which is why I don't play biotechs generally. But we did see this, if you played this dip, the play that I was looking at was, okay, it baselines here at 7. If I get any kind of dip below that, maybe I add a position. And so here you could pick up 680, 690, 680, 670, kind of ladder entry here, and then wait for this end of, power hour run. Sometimes we get a spike at the end of the day, but when we're way below VWAP on a IPO, the IPO price was $9. So nobody who paid $9 is going to be dumping on day one for a significant loss. They're all going to hold, they're going to hold on until they're green, usually, or they're in for the long term. So this one baseline down here, we got that run. You could take $1. I'm usually, if I make this trade on a stock that's just under $10, I'm probably just going to try to take $1, not be greedy. But if you kind of sense the trend in the low float, the way people are trading low float stocks these days, maybe you held on to overnight, and if you have a Webull account, you can take out profits on this early morning spike. And if you did and you timed it perfectly, maybe you catch 17. Bear in mind that at 17, only about 10,000 shares were traded in this minute. So even fewer than that were traded at 17. So you can't look back and say, oh, if I bought 50,000 shares, I'd be, rich now, because that's not, that's not realistic. But you do want to look at some things here in terms of how long do you want to hold into day two. One of the things I always look at is what happens at 7 o'clock. At 7 o'clock, this is when most of the trading platforms open up for pre-market. This is TD Ameritrade. This is E-Trade. This is most of the kind of more established, more reliable trading platforms. And if you see this 7 o'clock come along and drop really hard like this, then I'm probably going to at most give it this opening run and exit there and expect, especially for a biotech, for this to kind of be falling off. And if you did get in at 680, 690, you don't want to be taking a loss on this. Once that initial pop comes in, at least take partial profits out at that point. And, you're probably looking to get out at, by now. Another one, this one I was more bullish on. I did a little bit of a different strategy than I've done in terms of, I did not buy the debut. What I did do is set up a bunch of ladder trades right before the IPO debuted. So the IPO price was $625, and I said, okay, I'd like to get in this if it gives me an initial drop and recovery. And I'm willing to ride out that kind of slope down if that's what it gives me. But what it really did was it opened up at 345, and all these orders got filled. I had some below this actually that didn't get filled. But I'm basically saying, okay, well, I'll take 100 shares at 405, 200 shares at 390, 300, and I kind of escalate up the number of shares as I go down, and that gives me a very low cost average when it does debut. So I got in at about, my average price ended up being 344 because everything above the debut price got filled at the debut price. So even if I set it at like 10, it's still going to get filled at 345 at the debut price. So all these get filled. I caught one order below that at 340, and then it immediately jumped up into a halt. Now, you could take profits right out of the halt, but given the market environment that we're in, low float, to me, I said, no, I'm going to give this till, at least end of day. And realistically, I want to see what this does overnight. The overnight play has been strong. Why not give it that chance to give me maybe $5 or even $6 as this builds? I can always set a stop loss. I could set a stop loss at 450 and just say, okay, well, if I don't get the run, I'll just get out and say, okay, well, that's still a nice profit. So one of the things I would like to pay attention to on these is social media. And I go to Reddit and I go to Twitter, and you just put in, especially for Twitter, $SQL. That'll bring up everyone who's talking about the stock ticker SQL. and see if there's people talking about it. If a lot of people are saying, oh yeah, here's the next one. And if you watch this from, the day before when I sent out the newsletter alert, nobody was talking about it. I only found out about this one. It wasn't on any calendars. It wasn't in Webull. It was nowhere. It was on one obscure calendar, and someone in the Reddit chat group for IPO Warriors just sent it out to me. Matt, what's up with SQL? I was like, I don't even know about it. So I had time to do some research on it. They do DNA sequencing, RNA sequencing. It's at least somewhat in that vein of genomics, and Kathy Wood seems to like these types of plays. So it's in that sort of hype vein, and it made sense to make a play on this one. But as I'm watching Twitter from the day before, no one talking about it, to the day of, no one really talking about it before, except in response to the tweet that I sent out. And then throughout the day, other people are queuing in on it that had nothing to do with me. And now they're just talking about it because it's a new low float IPO. And then over the weekend, people are talking about it. And this morning, a lot of people are putting it on their list next to BBIG or some of the other low float plays that have gone. So these are interesting plays for me. I'll keep an eye on them this week. Right now, low float IPOs are kind of a hot topic. So if you can get in early and ride them out a little bit, there's a really good chance for, an upside. And I see, especially if you get in below the IPO price, how something that was priced at 425 down at 330 is not going to drop much further than that right away. So I like these plays. I'll keep looking for them.
Okay.
These are a little bit different than the stealth IPOs. The stealth IPOs, and people have asked me, Matt's up, what's up with that GSUN play that we talked about last, months and months ago? That just hasn't gone. It's Chinese. I believe it's educational. I think everything Chinese is on hold. We haven't seen any of these kind of stealth IPOs since the DD IPO was such a disaster, and the SEC basically said, okay, no more Chinese IPOs right now. And those were they looked like money laundering schemes. The more I researched and the people I talked to, the best explanation we could come up with was, that they were a funnel for moving money out of China into Western markets. Cool. By laddering up low float, IPOs. The underwriters were likely withholding shares to keep, to force these pops, because you went back and looked at the halts and they weren't high volume. They were just like people forcing the halts up by controlling the float. And they really seem to be intentionally hiding their IPOs, like intentionally not announcing them, intentionally keeping them off the calendar. And it was always the same underwriters: Network One Solution, Bosted Securities, and other underwriters that are, that we found direct links to them. So it really looked like that. That's different from these kind of sneaker low float IPOs, where it looks more like they're just small companies. They don't spend a lot on marketing, and they kind of get squeezed into a calendar that right now has been pretty cold. So I'm playing these a little bit differently than the stealth IPOs. The stealth IPOs were getting driven up right away. So the debut prices were already kind of ridiculous compared to the IPO price, like double or triple, and then going up 10 times. Remember UTME, remember EJH. There are a handful of these that and for those, you really do need to set your limit order way above the IPO price to catch them. Whereas these kind of sneaker IPOs, I'm catching on the dip and then letting them run up. And I've used that on DATS. I use that on IINN. I use that on SQL, and they've all turned into pretty good win opportunities. So let's look at the week ahead real quick. Not a lot, really just one pure IPO, and that's Double Down Interactive. But there are two others that I just want to keep an eye on, and I'll explain the reasons for those. Although generally I don't play those types of, call them debuts. I do want to take a look at those. Double Down Interactive is a Korean app developer. Their biggest title is Double Down Casino, and most of their games that I looked into have something to do with gambling or gaming, this type of thing. And generally, I would say I don't love app plays anymore. They just haven't done that well on the IPO. This company does have growing revenue. It's about, and profit, both about 27 to 30% year over year, for the 3 months ending last month. They tried to do an IPO in June, so there's a lot of kind of relic news pieces talking about the IPO that they were trying to do in June. And what I do find this to be interesting is that it's relatively low float. They only have 6.3 million shares coming to market. So for an established company that's generating revenue, operating profit, and 6.3 million shares is very low. So if this starts trending on social media, if people are talking about it, I think it's worth a play. So the next one I want to talk about is Focus Universal. And I kind of want to talk about two things here because I get asked this a lot. People don't quite understand what this is. Just a follow-up offering. So follow-up offering is just, people think, oh, why does, after a company IPOs, why should it care about its share price? It's done. It's already, why does anybody care? One of the reasons is that the IPO is just the initial public offering, and they can make as many follow-up offerings as they want. They can always sell more stock to the market to further fund their company. And of course, this causes dilution because they are putting more shares into the market. But a lot of companies do this. I mean, Tesla's done this many times, and people keep eating it up because they love the company. Focus Universal, this one, I'll just jump to why it's kind of interesting, is that the float will be published as 2 million shares, even though there's already 15 million shares in the market. So it seems like people might confuse the two. But there's also the fact that this is a Bosted Securities underwriting. And as an underwriter, Bosted Securities has had kind of this magic touch of being able to control the, what's actually the stock that's actually being traded. And we've seen a lot of ridiculous swings in stocks that were underwritten by Bosted. And here's one. This stock has traded as low as 20 cents and as high as $10 in the past 52 weeks. So it's just, and it's just such a random sounding company. You read about you go to their website and check out what they're doing. They're doing web marketing and SEO. They're doing HEPA filters. They're doing anti-counterfeit authentication, and they're doing some kind of sensor that interfaces with smartphones. I mean, they're just kind of all over the place. And you feel like, okay, well, they're just sort of chasing headlines. And when they're chasing headlines and, not a huge float, there's a good chance that they just come out and say, hey, yeah, we're getting into NFT, crypto mining, cybersecurity, and everyone's like, oh, that's hot. And then they all, it's just, and we've seen this a lot with Bosted underwritten stocks. So anything that's underwritten by Bosted, Network One Solutions, now Maxim Group too, because they were the ones who did RGC or RBC, that one that just was ripping crazy last week. And that was coming off of the expiration of the underwriter over allotment period, where they were given 45 days to buy shares. It's like the day after they finished buying up shares and closed that over allotment, RBC went on that insane run from like 4 to 45 or something.
Matt, wait, question before you move on. So if a company is going to do a follow-on offering, do they have to disclose that in their S1, or can they just be like, oh, surprise, dilution like the next week? Or,
remember what Coinbase did?
Well, that was an insider selling, wasn't it?
They did a direct listing, and then they raised a bunch of money, through a private placement.
No, that was Robinhood. Sorry.
Yeah.
Okay.
So Coinbase, that was part of the reason that their stock just sunk, and they're being sued for it now, because the assumption was, oh, great, you're doing a direct listing, you don't need cash. I'll buy in on the debut.
Right.
And then about a week later, they're like, oh yeah, so we're going to do a private placement and raise a bunch of money. And everyone's like, wait, what? So they don't have to disclose it when they do the S1 on the IPO. And typically these secondary offerings you see it a lot. And one of the other reasons I don't really like biotechs is that you'll see a company like Ocugen, for example. Ocugen had some big news. This was a couple months ago, and the share price jumped, that they were getting kind of moving on to the next level of FDA approval, or they got approval in India for something. I forget exactly what the headline was. And they used that opportunity to raise more cash. And I mean, the second that news hits the wire, the share price just plummets, especially for something that has, shot up. And we've seen AMC raise money when their share price went up. Hertz famously tried to raise money after declaring they're going bankrupt. So anytime you see this, it's going to get a reaction from the market. And with biotechs, you see it a lot when they get an approval. It's like, okay, great, the share price is going to go up and we need more money for the next phase. We've seen it with companies when they sign huge contracts, supply contracts, like, okay, well, in order to manufacture all the materials, we're going to have to scale up our manufacturing capacity, and we're going to have to issue more shares. We're going to need to raise money from somewhere to meet that. And when they do that, anytime they do that, they're diluting the share price and it's going to come down. So I really just wanted to talk about this because people keep asking me about it. I know that in Webull, in the IPO center, it shows the follow-up offerings as something you can buy in on. Usually the offering is right around or even above the current or below the current share price. And it's sort of like, well, why not just wait till the secondary offering and then buy at the market if you like this company? Or better yet, wait till more shares are available and price comes down and then buy it. Once in a while, we have seen some moves that I just can't explain on the follow-up offerings where the price will go up. And, I don't have...
That makes no sense.
I don't understand it at all, other than it's some kind of free publicity that, puts it on people's radar. The next one and the last one for this week, at least on the current schedule, and this one is also not on a lot of the calendars, so I'll have to verify it. But this is Generation Income Properties. Nothing particularly interesting. They own and operate a bunch of lease properties. They have on their list like a 7-Eleven, a Starbucks, a Walgreens, a Sherwin-Williams, a few other kind of business locations where they are leasing them out to tenants. Apparently, they do not make enough money to cover their operating expenses, which is maybe COVID related, but it also just isn't that interesting to me. It's also an uplisting. At least that's what I read in multiple places, but I couldn't find any price for this right now. It's not showing a price on Webull, and I couldn't find any price history anywhere else, which is a little bit weird. Usually an uplisting has its share price for the OTC stock listed. So the only thing, again, that makes this interesting is that it's low float, 1.5 million shares. I don't know if there's anything exciting in terms of what this company does for people to feel like, oh yeah, let's play this one. But we've seen a lot of companies that don't have any reason. They just get targeted for being low float. And, if it's kind of like, if this one can fly on just being low float, then there's no reason not to get into everything that's low float on an IPO. If this one tanks, I can say, okay, well, at least there is some threshold for mediocrity that I don't need to dip below to find a play. So that's what we have. Yeah.
Question from the chat early on. Do you have thoughts on the Rivian IPO or the filing from last week?
Yeah, sure. Rivian's pretty interesting. I think that it's generally something that I like it because it's got the hype. It's got the
it's got the story.
It's got the story. And actually, just to jump, because we have a few more minutes here if we want to take them, we were talking last week with Mitch about, what is the general strategy of this and what do I look for in a winner?
Yeah.
I look for retail demand. That's the key. If there's no retail demand, then, the price isn't going to go up. I look for brand name recognition. Rivian, we've heard about this company a lot. It's kind of strong enough to go IPO rather than SPAC, which has been the exception to the rule in terms of these EV plays. Is it in a hyped and trending industry? Sure. EVs have gotten a lot of hype. I think the bubble was, last February, and they really we've seen a lot of them just get destroyed since then, but they've kind of stabilized, and some of them even started kind of rebounding a little bit last week. I do look for growth and solid fundamentals, and we're not going to have that with Rivian, so we are really looking at the story. I really question how profitable EV. I've always been pretty skeptical on the EV trade. I've always seen that, eventually Ford and GM and Volkswagen, all these other companies are going to be in a better position to take this market. Tesla does not trade on fundamentals. Tesla is a hype and momentum play, and people love it. but they're not, I mean, without government credits, as I understand it, they're not profitable. They have a very charismatic CEO. He can move the price of Dogecoin, huge percentages with a single tweet. He's kind of untouchable. So, but not everybody's Tesla. And Nikola tried to be Tesla and famously crashed and burned. So the other thing is, I'd like to see with Rivian, what is the float? People say, well, and this is one of the things when I first started trading IPOs, I didn't quite understand. I didn't really get it until about, some of those Chinese stealth IPOs that were just ripping. And then I started breaking down, what was happening behind the scenes and realizing, oh yeah, well, of course, if you come to market with 5 million shares, you can manipulate the price. I did see hints of this, and people mentioned it. I remember Lemonade did really well on the IPO, and I think they had only 9 million shares. But with Rivian, if they come in with like 55 million shares, it's a little bit like, I wish they would come in with like 20 million shares. And when you see a company like Doximity come with, I think it was 21 million shares on the IPO, it's like, oh, that makes like a strong company with a not ridiculous amount of shares. I remember saying, like, don't touch Didi. Didi, has 330 million shares. How are, that's so many million shares.
Yeah.
That's like everyone in America buying a share.
It's almost counterintuitive because the 300 million shares would imply stability, which is not what you want
not on an IPO.
Right.
And, I didn't know that the Chinese government was going to come in and sink it, the day after it IPO'd. But
what are you going to do?
Yeah, Uber had a huge float on its IPO, and it didn't do well. You look at the majority of IPOs that have been 100 million shares or more have not given a lot of pop because there's just so much supply. So retail demand, that means demand has to exceed supply for the price to go up. That's like the first rule of economics. So I'm looking, and that's why low float is so powerful. So I'd like to see Rivian come market with the low float. And that would be kind of the tipping point for me to say, oh yeah, it's definitely one of those day two plays where if you do get a day one dip, it's like, okay, we'll buy this because everyone's going to read the news overnight and say, oh, Rivian IPOs, and they'll probably debut at some kind of premium to the IPO price. So the headlines, will say that, oh, it debut, IPOs at a 30%, shares pop, soar, rocket after IPO.
Right.
That might not be true for those who bought on the debut, but that day two media cycle, which is like people go home after work. Oh, Rivian IPO'd last night and it went up. Oh yeah, that's going to be like Tesla. I'm going to go in and buy, and then the next morning it makes a run, day two run. So I like it. I like it for a run.
All right, Matt, we got to wrap it up here. Thanks a lot, Matt Hammond, IPOwarriors.com. Thanks a lot, Matt.
Thanks, guys.
All right. I got to wrap. We got live trading coming up right now. No David Green this week, but Mitch, Ryan, myself, Zunaid, I hope, will be on right now until 11 o'clock Eastern time. So this will end. It'll redirect to that stream. Please, please, please do me a solid. Smash that like button. We are at not quite 5. Can we get the 500 likes today? I don't know if we can get there. Thanks to our guests today, Tim Quast and Matt Hammond. Please remember, all of the information from our show is meant to be used as informational purposes, not for investing or trading advice. That'll be a wrap. I'll see you guys over on the next stream. Live trading into the open.